welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to unpack your stock-related questions tonight are Rowan Williams from Nitrogen Fund Managers and Ricus Reeders from PSG Hole-in-One Ruimsig. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Quite a welcome screen there that we are seeing on the JSE today with all the green. Starting with you, Rowan, are people just bargain hunting at this point?
Yeah, we have seen a really soft JSE, another down month. We've finished February with an extra day. So, yeah, I think the JSE is just struggling to get any momentum, get any sort of buying interest. What we're seeing is a sort of higher for longer narrative, and I think that's weighing on emerging markets generally. We're seeing the rand also fairly weak against the dollar. The sort of global markets, S&P, they sort of moving ahead nicely. I think what's happening, we're getting close to the election or closer, and that's uncertainty starting to dribble in. We're also seeing some results coming out and showing general pressure in the economy. I think some of those headwinds from last year, the load shedding, Transnet logistics issues are coming through in earnings. And so it's a pretty downbeat mood. So it's hard to get excited. Slowdown in China. There's a number of things that are just weighing on sentiment at the moment.
Yeah, and there's actually been a general concern about the liquidity on the JSE, the low liquidity. Ricus, I mean, results season is heating up. Are the results not boosting liquidity on the JSE yet?
I don't think so. I think there's just a general disinterest from both local and offshore investors to have anything to do with any company that tries and makes money within our borders. And it's not me being completely negative, it's the companies themselves. If you take a look at their outlook, their commentary, it's basically the same old issues. Costs are difficult to control because input costs in the form of electricity or water or anything else for that matter, transport, everything is against them from being able to do business. It is remarkable how some of these companies are actually dealing with that kind of pressure, and it's a feather in the cap to them. But if your macro is against you, it's very difficult to make money in this country if you're a local business, and that filters through to obviously investors as well, whether they be local or offshore.
Yeah, and actually quite interesting, Ricus, you mentioned some water supply issues. Spur came out today, something that I don't think they've said in their previous reporting periods, that now their franchisees are dealing with cleaner water supply issues, where now that's an extra cost on top of already the everyday cost that they are seeing when it comes to the insecurity of energy, saying that although, you know, a lot of their franchisees have generators, but now they're having to deal with the extra costs of repairing those generators and also replacing them. Just talk to me about, you know, just the general sentiment, the outlook that these companies are coming with, and maybe just a comment on Spur as well.
Yeah, so I think what we're seeing is a very tough consumer environment, and some companies are seeming to trade fairly well through it. For example, Spur, I mean, their numbers were actually quite good. Truworths, for example, also came out with the results this afternoon. Very muted top line. Yeah. They've got some currency tailwinds helping them out in their UK operations. But if you look at unit volumes, they look like they were down 12%. On the prior period. So that's a significant decline. So it remains challenging. I think a muted top line, we know there's no growth in the economy. And as we've spoken about, a lot of cost pressures. So I think, and it's really testing the mettle of management teams. Some are faring quite well. I think they're managing through it fairly well, nice diversified business models, not too concentrated in one area. Some are struggling completely, like Pick n Pay, for example. I think some are benefiting as well. So if you look at Grindrod, for example, they're benefiting from Transnet's woes and increased volumes through the Maputo port. So you can look at it sort of some, I think, positive, neutral, and negative, and you've got to look at it. It's quite a key aspect, I think, in terms of in today's investment climate, just looking at how the companies are going to fare in this environment.
Yeah, and actually quite interesting, they after Spur released their results, we did see the share price surging about 6%. And actually, if I remember correctly, that's been the reaction to a lot of their updates recently, Ricus. Do you think that the momentum of how the stock price is going has little headwinds against it, or few headwinds against it?
I don't think, well, I'm talking my own book here because the stock was Spur in my model, but you are quite correct. They are continuously delivering good results in a difficult environment, and it seems to surprise the market every 6 months, and long may it continue. But gosh, I mean, as you said, if you've now got water issues as well, I hope those surprises to the positive side continue, but I mean, it's not as if they're getting less and less pressure. But it shows the quality of the operation and their brand.
Indeed, indeed. Well, let's go into some of the questions that we have gotten from our viewers. Starting off with, well, this one is on MTN and Implats. Let's start off with Implats. Is Implats showing good value at these levels? So the viewer says, I have 500,000 to invest. Do I phase it in or put the 500K all at once? I guess, yeah, let's actually take them both, MTN and Implats, because they have 500,000 to invest. And they're asking if they should phase it in into these two stocks or put it all in at once. Should they? And the other question is, are there other shares showing better value? Rowan, on your side?
Yeah, I think those two particular counters facing very tough environment. We know Implats, the PGM space, the realized metal prices have come down significantly. They made a significant investment at the top of the cycle in RB Plats, so spent a lot of money on that. And the results came through production fairly good, but the realized prices and the profitability down significantly. I think some of these businesses, the balance sheets are going to get strained as well. And really, so in terms of Implats, you are betting on a bounce in the commodity prices. Without that, I don't think that you can justify the share price even here. So I would say there's better value elsewhere, particularly in sort of SA Inc. stocks that we think will do quite well. They have, I mean, we beat quite downbeat, but Standard Bank came with a positive trading data update. Sanlam came with a positive trading update. There are companies that are still faring fairly well, and I think are offering value at these levels. I'd rather go for a business that's positive business momentum than negative business momentum. It tends to get harder. And in the case of MTN, I'd have to say the same. Yeah. We've seen a massive devaluation in the Naira. MTN Nigeria is a huge part of their operations. It is going to play havoc with the profitability of that business, and obviously the translated profit through to MTN. They've also got some dollar-based costs, index costs on the masts business. So very complex operating environment, very challenging. We know the local challenges, load shedding, sort of flat demand. So again, I think, and that 500 grand, I would deploy elsewhere.
Okay, so Rowan's saying nope, going into other stocks. On your side, Ricus, what would you be doing? Would you be putting in your 500K into these two stocks, MTN and Implats, or not? Or maybe just putting in a portion of it?
Yeah, Rowan answered the fundamental side of things very well. I've got nothing to add to that.
Yeah.
You mentioned earnings momentum. Let's take a look at price momentum. First of all, if I were the guy asking the question, and the decision has to be made tomorrow, I wouldn't put any money into either one of them right now. That's because the price momentum is down. You take a look at a graph. MTN, I've got a target price of plus minus 70 Rand. Implats about 52 Rand roundabout. I'm not saying it's going to go there, but that's possibilities. They are both in very much confirmed downtrends. I don't like investing in stuff that's in a downtrend. I wait for them to go flat, maybe, or otherwise start selling out of a downtrend. I don't mind missing a few percentage points to the upside, but I don't want to suffer a loss if what I think is the bottom is not what the market thinks is the bottom. So no, I wouldn't put any money in either of those right now.
All right, interesting. And I hope the viewer did get some good insights in terms of what they should do next. Rowan, you were talking about Standard Bank and, you know, the financial services companies that have come out with good numbers. There is a question on Nedbank. Can you ask your panel for their outlook on Nedbank and banks in general for this year? Okay, let's start off with that.
Yeah, so okay, I think we saw, I guess, Standard Bank with the trading update. FirstRand came with their results today as well. So somewhat muted growth, HEPS up 6%, so not terribly exciting. Still has a best-in-class return on equity, and showing you, the sort of tough trading environment, very muted. They, I think, managed the business really well. Net interest income still positive. The endowment effect, the high interest rates still driving income, but the non-interest revenue not as buoyant. So that sort of business activity, transactional activity, not as buoyant. So manage the costs. And I think the different banks, our Standard Bank looks by far the highest earnings growth. I think they've got the Africa vector also, and the African operations driving growth there. Nedbank's screening the cheapest, in fact. So that one is interesting. I think they will have sort of middle of the road results, maybe up 10% HEPS growth, which looks decent, very high dividend yields. I think what we need to see is improving sentiment for South African equities and South African investment case generally, which we think will come post-elections. And then the banks, they are screening value, but in terms of the re-rating, I think other than Standard Bank will come through in the second half. So it's not a bad time to enter. They cum dividend. You'll get the dividend. That gives you some downside protection. And then they should see share price appreciation maybe in the next 12 months.
Ricus, are banks outperforming the economy and can we expect them to for a while?
In a high interest rate environment, they will do. The problem is when that rate cycle turns and they've got to recapitalize. So I'm not overly fond of banks as a long-term investment vehicle because they are essentially not businesses that really excite me. But there's a time and a place for everything, and at the moment I think it's banks, and it's just on the back of what's happening with interest rates, and obviously some internal factors as well. As Rowan mentioned, Standard Bank's Africa operations is part of why they had such good numbers, and the same with Salem in India, for example. So if there's a bit of a geographic diversity and it works in your favor, then at least there's a case to be made for which specific bank you want to go into.
The second part of that question says, please include Investec. Ricus, what do you make of Investec? And obviously you said that you would not invest in banks really for the long term, but would you say the same about Investec?
Yeah, it's got nice positive price momentum. I think similar to Standard Bank, a lot of what is causing positive sentiment in the operation is the offshore operations, which went through a difficult time a few years ago, but that seems to be settling in pretty nicely. So it's not a bank that I've really been invested in for a very long time, and maybe I should have been over the past 2 years. But as I've said, considering the positive news flow, what the price itself looks like, the scope of the operations geographically, I don't think personally I'll be swapping some of my positions that I've already got just to go into Investec, but I think it's a fair option at this point.
All right. Rowan, on your side, how investable is Investec, and also would there be a specific timeline that you're looking at should you park your money in there?
Yeah, so Investec has actually, as Ricus said, done very well in the last 2 years. They sort of seen a significant re-rating. I think they've worked the balance sheet much harder, lifted the return on equity, also got the sort of UK businesses more focused. They've done some portfolio rationalization on the wealth management side, unbundled 91. So they've been a busy management team and certainly have created a lot of shareholder value. So hats off to them for that. So, but I think a lot of the re-rating has taken place. So if you're looking for relative value and then you're saying where at this point in time is a better entry point, we believe the South African focused banks, not that Investec doesn't have operations in South Africa, but it's split between the UK and South Africa. The sort of most South African centric banks, Nedbank, Absa, look to be screening as the best value right now. And so we would be putting money there, as I say, for sort of an improvement in the rating and the dividend yield at this point in time.
All right. Well, since we're still on financial services, there's a question on Coronation. Coronation has offered odd lot offers to existing shareholders who hold less than 100 shares. Why would they embark on such an exercise, and what benefit to shareholders is there? This is an administrative exercise, right, Ricus?
Yeah, basically. So if you think about the costs associated with sending a investor or a shareholder of Coronation that might have 100 million rand invested in the company, and somebody's got 100 rand invested in the company, the costs associated with administering those two entities are exactly the same. So if you can get rid of your 100 rand investor and not have to pay too much, then it's obviously to you that is Coronation's benefit.
And actually, just sticking with you, Ricus, if you are one of these odd lot shareholders at this point, is there much value for you? And do you also, can you elect to stay on as a shareholder?
Sorry, can you elect?
Yeah, can you elect to stay on if you do have, if you are an odd lot shareholder? Is there a way to stay in the stock?
Can't answer the last one because I haven't really gone through the announcement itself. But yeah, it's less than 100 or 200 shares or something like that.
500.
500. Yeah, then it probably depends on the value of that specific offer in relation to the rest of your portfolio. If it's less than 1% of your focused asset investment, I mean, I can't see any reason why not to accept. Even if the price doubles, so what?
All right. Rowan, I want to come to you with another question. I don't know how solid your crystal ball is or how clear it is at this point. Your outlook on inflation in the next 10 months?
Yeah, so inflation's definitely moderating. I mean, what you have seen is a very high base. So, and some of the pressures that drove the high prices are abating. Energy prices are coming off. Food prices are also moderating significantly. Those are two sort of been big primary drivers. It looks like the Reserve Bank is looking for inflation, if we talk about South Africa, to get into the mid-range. That's between the 3% and 6%, so 4.5% towards the end of the year or early next year. So it is a key figure that obviously the Reserve Bank is looking at in terms of cutting interest rates. I think it has been a little bit stickier than anticipated, but that's been a global phenomenon. And so probably the rate cuts will be back-end loaded in terms of this year. So SARB is focused on seeing inflation at the midpoint, and that will be also, I guess, quite a bullish sign for more interest rate sensitive sectors like the banks, which we've been talking about, clothing retailers, and a little bit of pressure off the consumer. So maybe again, after election, second half of the year, it sounds like we're putting all our eggs in the second half of the year, but we hope for better.
Indeed, indeed. Let's go into Life Healthcare. Life Healthcare declared a special dividend of 600 cents per share following the sale of its AMG business. However, the share price did not respond as expected following the announcement and remained flat. Why is that, considering that the special dividend is mouth-watering in my view? Ricus, could it be the fact that all this was baked in before the payment of the special dividend or not?
Yeah, I think Well, so two things. Everybody knew the dividend was coming. Now we know the quantum.
Yeah.
The price didn't move because the quantum of the dividend was market expectations. Once the dividend gets paid out, obviously the share price will drop by approximately the same amount as that of the dividend.
Yeah. Yeah, just actually, Life Healthcare as an investment, it's sold its AMG business, it's declared the special dividend. Rowan, what would you be doing right now as an investor in terms of Life Healthcare, whether you're in it or not?
Yeah, so you're going to sort of say buy it at 17 Rand 50, get 6 Rand back, so you're in at 11 Rand 50. I think some, individuals have to consider the dividends withholding tax, because you're going to sort of lose that on the dividend, 1 Rand 20. So that's quite significant. But I think it's a much more streamlined business. Obviously, they have realized the bulk of the UK operations, the imaging business. And so they focused on the local operations. They're doing a small acquisition, and they do still have a small imaging operation that has some potential. So I think it will be a more focused business. They have lagged in terms of share price performance. Yes, the only real competitor or comparative really is Netcare that's listed now, that's South African focused as well. So their top line hasn't been great. They have a lot of sort of contracted for revenue, which is at lower revenue levels. So they need to control their costs. But I think at this level, getting the dividend back, it is quite a good entry point. Looks quite appealing, and I think it will be a more focused business. A little bit of upside with this sort of imaging, and it's around an Alzheimer's drug. So that's sort of a bit of positivity that you'll get sort of, I think, free optionality on that.
All right. There's a question here, a list of stocks about on a 5 to 10 year basis. Let's start off with the retailers, Mr. Price and Clicks. Of course, we were talking earlier on about retailers such as Truworths that really seem to be showing tepid growth. The outlooks aren't looking good. Mr. Price and Clicks, Ricus, would you be going in or would you be cautious?
5, 10 year outlook. I don't even know what's going to happen next week. Really, I mean, solid businesses for the moment, but I mean, I know people say investing is for the long term, but goodness gracious, anything can happen, and it normally does. So I think one has to take a look at the shorter term and say, okay, do these companies offer value on a fundamental basis? What does their, from my side, what does their price action look like? Is there downside or upside? And then take it on a reporting to reporting period. I mean, don't be obsessive about it and track it day to day, but track it every 3 or 4 or 5 months and say, well, this is my expectation of what I want to get out of my investment, capital appreciation plus dividends. Is it meeting that expectation? If it's not, then obviously you're just wasting your time, and you should consider going to something that will. So it's an investment decision rather than what the company will do in 5 or 10 years' time. It's in the end, it's the return on your funds. It's not what the company is doing.
All right. Well, gents, I do have to go to your stock picks. To our viewers, I will be continuing with analysis on this question tomorrow at 1 p.m. That is when Stockwatch plays on Fridays. Rowan, coming to you, what is your stock pick for today?
So we are choosing Sanlam. I think good earnings momentum, good price momentum. They came out with a trading statement, and given the operating environment, the numbers were very good. Return on financial operations and sort of core profits almost up 25%. So executing incredibly well in this environment. They got a nicely diversified business. They're also sort of streamlining their portfolio in Africa through JVs. And then they have an Indian operation that is also looking like it's performing well and improving. And so they've got exposure to emerging markets, and that's probably the fastest growing emerging market for the next 5 years. So on a 5-year basis, yes, I think it's also looks quite positive.
All right. On your side, Ricus, what are you picking?
It's offshore, and it's European engineering giant Siemens, who apart from doing heavy machines, have also got an electronic component, one on the automotive side of thing, and one on construction, but in the form of sort of smart buildings. They're in Europe, first of all. European share price is incredibly depressed for obvious reasons if you take a look at their economy, but I still think the prospects for them lowering interest rates at a faster pace in America is pretty good, which will benefit things like Siemens. Secondly, as I said, on the electronic side of things, there was a lot of overstocking on the automotive side, which is probably coming to an end. Someone should be able to get some volume and income growth there. On the other side is their smart infrastructure, which, strange enough, ties in very well with large language models in the sense of using so-called AI to make that kind of machinery and electronics that they provide for smart infrastructure work better. So that could be a nice change in income vector for them as well.
All right. Well, thank you so much for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Rowan Williams from Nitrogen Fund Managers and Ricus Reeders from PSG Hole-in-One Ruimsig. Up next, the close. Stay with us.